Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Whoops, wrong slide. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X, formerly known as Twitter. My name there is @DougPless. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I look at how market makers and traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis, and for setups for entries and exits. And when I talk about setups today, I will be talking about setups in an underlying asset. Those setups can be taken any number of ways. For example, S&P 500 setups can be taken with ES futures, SPY shares, SPY options, SPX options, or even ES options. And if there's a case where a setup may work better with options rather than shares or futures, I will point that out. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel and Discord, as well as the chat and YouTube for your questions and comments. Please feel free to post, and I'll do my best to answer your questions. And hello, Soft-Hearted, welcome, glad you're here. Hello, Floyd's Garage, welcome, glad you're here as well. All right, here's my agenda for today, Tuesday, December 5th. First of all, I want to go over news items, economic data, and events for today as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today. And then I'll talk about the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, I'll be glad to do that. Please let me know, and I'll do my best to take a look at that stock. All right, let's get started. News items. There were a couple of, I guess, lower impact or medium impact data releases today. First of all, there was some PMI data out. Let's go to the S&P 500. There's some PMI data out at 9:45 and at 10 a.m. The 10 a.m. data, the 9:45 a.m. data came in line, and then the 10 a.m. services PMI was greater than expected, also greater than the previous number, and the immediate reaction to that data at 10 a.m. was bullish, leading to a pretty sharp jump higher in the ES futures. Most of that came back down close to VWAP, but a sharp jump higher. Also, there was a JOLTS number, That was lower than expected. That's job openings, lower than expected, lower than previous. Maybe the reaction was to the JOLTS number. So anyway, PMI data greater than expected, greater than previous, and the JOLTS number less than expected, less than previous. So anyway, there's the reaction in the S&P 500 ES futures. All right, for the rest of the week, tomorrow the ADP employment report is out at 8:15 a.m. Eastern Time. And then on Friday, the jobs report. This is the monthly jobs report that has been delayed a week. It will be on this Friday at 8:30 a.m. Eastern Time, and then at 10 a.m. Michigan consumer sentiment data comes out. All right, so a pretty light week this week, and then it picks up pretty substantially next week with CPI data, FOMC meeting and announcement, and also the very large December expiration on Friday. And that will also be the futures contract rollover. I'll talk more about that next week. All right, let's get started with positional analysis now. So this is the ES futures and Bookmap S&P 500 futures. And before I take a closer look at this chart, I want to take a look at a larger time frame. I'm going to go to an SPX chart. This is the SPX 30-day 1-hour chart. First of all, I want to point out the key turning points on this chart. This is the October 30th. This is when the rally began. On the Friday before, traders were loading up on puts, concerned about weekend risk. And then on Monday, as price increased, implied volatility dropped. Market makers could buy back short futures, and that led to a huge IV collapse, put Vanna rally. And during this time, market makers' position on the gamma curve was shifting from negative to positive, and as that gamma position shifted more positive, price slowed down. Then it was boosted higher by the CPI report that came out on November 14th, much better than expected, and the grind higher continued really up until about this Wednesday a couple of weeks ago. And since then, in a positive gamma environment, the SPX has been consolidating between around 4550 and 4600. All right, let me point out some levels on this chart. And before I do that, I'm going to zoom in just a bit here so we can see this more clearly. So here's the consolidation between 4,500 and 4,600 that still continues. All right, levels. First of all, the dashed purple lines are showing the lower and upper weekly expected move. That's based on the options market. That is updated. I update that once a week over the weekend. Those levels remain there for the week. Then the dashed blue lines are showing the lower and upper daily expected move, and I update that once a day. So SPX is trading in between, in the expected range, in between the daily expected move as well as the weekly expected move. All right, the dark red lines are showing the Spotgamma levels. These are proprietary Spotgamma levels based on open interest. Spotgamma applies their own algorithms to these levels, to that open interest data to come up with these levels. I'm going to point out the key daily levels. First of all, here's the put wall at 4,400. That's a strike with the largest net negative gamma that can be expected to act as support. The next level up is 45.45. That's the volatility trigger. That is Spotgamma's proprietary volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. And note that level did move up from 4,500 yesterday back to 45.45. Just above that is the 45.50 absolute gamma strike. That's a strike with the largest absolute positive and negative gamma. So that's where most of the gamma weighted open interest is concentrated. And then above that is the call wall at 4,600. And that's a strike with the largest net positive gamma that can be expected to act as resistance. So as I mentioned before, this 45.50 to 4,600 is the current range. And note that note that 45.50 is the absolute gamma strike, and that did shift lower from yesterday. It was at 4,600 yesterday, shifted down to 45.50. So really the key range for the S&P 500, looking at just absolute gamma, is 4,500 to 4,600, with 45.50 being the central point, the absolute gamma strike. All right, so I talked about shifts and levels. Volatility trigger higher, absolute gamma strike shifted lower, and those are the key daily levels for the SPX. Now let's take a look at a one-day chart just to get a closer look at the SPX levels that are in play for today. So this is actually 3 days worth of data. 1 minute chart. I'm showing this to show the 4,600 call wall. $4,600 call wall acting as resistance. That was on last Friday. And then here's the 45.50 level, more or less acting as support, lower bound. And note that SPX is above its volatility trigger at 45.45 in a positive gamma environment. All right, let's take a look at Bookmap now. So in Bookmap, I have my own cloud nodes. So I can show SPX levels. There's that 45.50 level. It did act as support just before the cash open, almost to the tick. So that is SPX 45.50. Note there is a difference in price between SPX and ES. And today it is somewhere between 6 and 7. It looks like it may be closer to 7 now. It was closer to 6 this morning. That's what I'm using. So somewhere between 6 and 7, I'm using 6. So I'm showing SPX 45.50 at ES 45.56. And it may be a little bit higher than that. So I also have SPY levels on this chart. There's the SPY 455 absolute gamma strike. That level shifted lower as well. Just like SPX, the absolute gamma strike shifted lower for SPY to 455, and also for SPY, the volatility trigger shifted lower. So this 455 acted as the first pullback point for a long this morning. Here's the 456 absolute gamma strike. I'm sorry, the 0 gamma level for SPY, and then the SPY large gamma 2 level. And note the point of control is somewhere between those two levels. That's where most of the session volume is concentrated. That's a session volume profile. So the SPX is in a positive gamma environment. This range mean reverting price action is very typical in a positive gamma environment where market makers are trading against price to hedge their delta exposure. All right, so those are the levels in play for today, both SPX and SPY levels. Stephen asked, what is the difference between the absolute gamma strike and zero gamma? So first of all, the absolute gamma strike, let's just take a look at we're on SPX. Let's go to SPX. This is the absolute gamma at different strikes. Orange bars are showing call gamma, positive gamma. Blue bars showing negative gamma, put gamma. There's the 45.50 level. So that is the strike with the largest absolute negative and positive gamma. So there really is not much relationship between the absolute gamma and the zero gamma level. So this is the absolute gamma strike for SPX. Here's the call wall at 4,600. That's the strike with largest net positive gamma. So just take the gamma on the orange bar, subtract the gamma on the put bar, come up with the largest positive absolute net positive gamma. Note also the amount of gamma concentrated at 4,500, like I mentioned. So this is the range, 4,500 to 4,600, where most of the gamma weighted open interest is concentrated. All right, so that's absolute gamma. Then let's go to the gamma curve. Actually, we may be able to find a better. This one I cannot, it's actually not showing the zero gamma level. The zero gamma level is at 4509. So that's where gamma actually shifts. It's right here, where gamma shifts from negative to positive. So that's the zero gamma level. And typically, Spotgamma looks at the volatility trigger, giving that more, looking at that with more importance than the zero gamma level. But the zero gamma level is the point on this curve where it actually shifts from negative to positive. All right, Stephen, I hope that answers your question. All right, let's take a look at NASDAQ now. And Stephen, if you want more information, just go to spotgamma.com. Look at the free resources if you're not a subscriber, and there's plenty of information on all the levels there. All right, so this is the NQ futures and Bookmap. Before I take a closer look at this chart, I want to isolate, first of all, QQQ levels. So this is a 1-day, 1-minute chart in QQQ. This is showing the 384 level acting as support this morning. All right, that's QQQ. And for QQQ, the volatility trigger shifted lower, just like SPY, and also the absolute gamma strike shifted lower to 385. So there's the absolute gamma strike for QQQ. All right, let's take a look at NDX. This is a 3-day chart. I'm showing this 16,000 level that's been in play for some time, acting as resistance on Friday. Now this 15,825 level definitely in play. That is the call wall and the absolute gamma strike for NDX. All right, let's take a look at Bookmap now. So in Bookmap, just like the S&P 500 ES futures, I have my own cloud notes. So I can show QQQ levels, NDX levels, and other levels of interest like there's the upper daily expected move, lower weekly expected move, and then this cluster of levels. Right now you can't see the label, but the 15,825 NDX call wall absolute gamma strike is in there in that cluster of levels. And there's the QQQ 385 absolute gamma strike. So the most important thing here is the 384, QQQ 384 acting as support, and then really this upper daily expected move acting as resistance. And we'll take a look at setups in a few minutes. All right, let's take a look at gamma notional now to see how market makers were positioned on the gamma curve at the beginning of the day. I'm going to go back to Spotgamma. I'm going to take a look at gamma notional. This is market makers' position on the gamma curve at the beginning of the day for the S&P 500, NASDAQ, and Russell 2000. Note all these numbers are positive. But for the S&P 500 and NASDAQ, they did shift lower from yesterday. All still positive. So what this means, in a positive EM environment, traders are short calls, market makers are long calls, and they have to trade against price to hedge their delta exposure. And that tends to subdue or decrease volatility, leading to more mean reverting price action range days rather than large trend days. Now for the Russell 2000, Russell RUT, and IWM, these numbers actually increased from yesterday, so became more positive. Less positive for the S&P 500 and NASDAQ, and more positive for the Russell 2000. But again, all positive. All right, let's take a look at the Vanna model now, and we can get a graphical representation of what that means. So what that chart is showing is market makers' delta notional, their delta exposure on the vertical axis, and the spot price for SPX on the horizontal axis. There are two curves on this chart. The first, the light gray curve, shows how market makers' delta notional may change with changes in price only. The purple curve adds implied volatility to the equation. That shows how market makers' delta notional may change with changes in price and implied volatility. And that change in delta with a change in applied volatility is the Vanna effect. Vanna is a second order Greek. And that's the curve that we want to take a look at, the purple curve. All right, let's take a look at price now. SPX currently trading right around 45.64. So toward the bottom of this curve, indicating at this point there's not much of a Vanna tailwind or headwind. Then if price starts to decrease, implied volatility increases market makers will need to sell futures to hedge their delta exposure. And then above around 4,600, if price increases above 4,600, market makers will need to start selling futures to hedge their delta exposure. And that's typical of a positive gamma environment. So right now, SPX toward the bottom of the curve, no Vanna headwind or tailwind at this point. Let's check SPY. SPY currently trading right around 456. Also close to the bottom of the curve. So this is showing again, if price decreases, implied volatility increases, market makers will need to sell futures to hedge their delta exposure. And if price starts to move above around 460, market makers will need to sell futures. Remember, they always want to remain delta neutral. So when their delta exposure increases, they have to sell futures. And finally, let's check QQQ. Right around 386, also on the bottom of the curve. All right, Floyd's Garage. I'm not sure. Is that a question? I'm not sure. Not sure I understand that. All right, let's take a look at some setups now. First thing that I want to do is take a look at how options traders are positioning themselves, how they're trading today. This chart is the hero chart, hedging impact, real-time options. So everything that we've looked at so far, other than Bookmap, has been based on static data that's updated once a day. Spotgamma takes open interest data from the OCC, applies their own algorithms to come up with the levels on the Vanna model, everything that we've looked at so far, everything that I use in my planning process. This is real-time data. This is showing options trades and market maker hedging activity in real time. In this case of this chart, for a combined signal of SPX, SPY, XSP, and ES futures. The white line is the price for SPX, and the purple line is the hero signal. Again, hedging impact, real-time options, showing options trades, market maker hedging activity for that combined signal. A rising line indicates positive delta positions. Traders are taking positive delta positions. Market makers take the other side, so they have to buy futures to hedge their delta exposure. All right, let's take a closer look at this chart. We'll start again with the S&P 500. Going to zoom in a bit. All right, this is the cash open right here, 9:30 a.m. Eastern Time. And notice almost immediately traders were taking positive delta positions. Note the timely flow alert indicating significant options activity. All right, let's separate out puts and calls now and see what options traders were doing. And in the morning, traders were buying calls. That's shown, oops, wrong tool. Shown by the rising orange line. When traders buy calls, sorry about that. I thought this issue had been resolved. Apparently it's still an issue with this separated out puts and calls. So let's go back to the total signal. And we'll just leave it at that. So we know that traders were buying calls this morning. So again, when traders buy calls, market makers sell the calls, and they have to buy futures to hedge their delta exposure. I'm talking about calls in SPX, SPY, ES. And notice as soon as the options traders take their foot off the gas, start taking negative delta positions, price moves lower. All right, let's go take a look at Bookmap. Take a look at that setup in Bookmap. So we'll go back to ES. Going to zoom in. So this is, I mentioned this before, just before the cash opened, that 45.50 level, acting as support. It was noted as support in the Spotgamma AM Founders Note. Price moved up. Traders were taking positive delta positions, buying calls. There was a pullback to the 455 absolute gamma strike for SPY. And good entry point for long that pull back again to 455. And then there's the 10 a.m. data. Price comes back to VWAP. Another good entry point as traders continue to take positive delta positions. And then just after 11 a.m. Price reversed pretty sharply lower. Note at these entry points, especially right here, right around the 456 level, the order flow shift. The volume dots are showing market buy minus sell. Magenta dots indicate more sellers than buyers. Green dots indicate more buyers than sellers. So there's the long setup this morning. This was a pretty sharp drop. I'm not sure if there was any news. We'll take a look and see what the Magnificent Seven was doing in just a minute. All right, so there's definitely a good long setup in this morning. Multiple pullback entries primarily to VWAP or close to it. If you missed the initial entry at 455. All right, let's go back and take a look at Hero again. And Hero at Floyd's Garage, I think, may be looking at this right here, this divergence. We'll keep an eye on this. Hero shifting pretty sharply lower. So far, price not responding. Typically, I find that the Hero signal and price action, there's a stronger correlation in the morning than the afternoon. All right, so that is the S&P 500. Let's take a look at another signal that has a very strong influence of both the S&P 500 and the NASDAQ. That's this Mag 7. This is a combined signal for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. Let's zoom in on this chart. So this morning, traders were taking positive delta positions in the Magnificent Seven. The dip buyers were in, taking advantage of the recent weakness in these stocks. And that move lower in the S&P 500, and we'll see in NASDAQ in a minute, was about 1107, right around here. And note, before that, the hero signal for the Magnificent 7 made a lower high. So a little bit of a leading indicator on that sharp drop lower. And then both the S&P 500 and NASDAQ did move lower as traders started taking negative delta positions in the Magnificent 7. And recently, this signal, the hero signal for Magnificent 7, has been a better indicator for the NASDAQ than the actual NASDAQ signal that we'll take a look at in just a minute. So let's take just a quick look at the puts and calls. Rising orange line showing traders were buying calls this morning in the Magnificent 7 stocks. All right, let's take a look at NASDAQ now. Pretty choppy signal. Let's zoom in on this. So just looking at the morning here, let's again separate out puts and calls. So in the morning, traders were buying calls and selling puts. And the selling puts lasted until about 10 a.m. So during the morning, that's shown by the rising blue line, and also rising orange line showing traders buying calls. So in the morning, both the blue line and the orange line moving in the same direction, and that's a very powerful directional indicator. And just like the S&P 500, now it appears there's a pretty big divergence between hero and price. All right, so that auto zoom issue is not only associated with puts and calls, but with the total signal as well. All right, let's go take a look at Bookmap again. So after this move higher, that was confirmed by order flow and especially hedging flow, traders buying calls in the S&P 500, the sharp move lower that was preceded by a lower hero signal in the Magnificent 7 hero indicator. And notice also the aggressive buyers on the way up, and then the shift in magenta volume dots to magenta, a lot of aggressive sellers coming in. And since then, the S&P 500 has oscillated up and down around the SPY 0 gamma level. All right, let's take a look at NASDAQ now. NASDAQ, very similar picture. 384 acting as support just before the cash open. Note the shift in order flow. Magenta dots, aggressive sellers on the way down. Aggressive buyers start to come in, shown by the rising cumulative volume delta. Also buy stop orders shown by the rising orange yellow line, indicating buy stop orders helping to fuel the move higher. That's also shown by these small green dots. All the way up to the upper daily expected move. Almost to the upper daily expected move. Also, NASDAQ rolls over about the same time as the Magnificent 7 traders started taking negative delta positions, right around 1107. And now consolidating between 386 and 387. All right, let's take a look at some stocks now. Let's go back to Hero. So again, a very choppy signal for NASDAQ. I like to look at this Magnificent Seven. These are also the stocks that I trade on a regular basis. All right, let's take a look at some of those stocks. So first of all, Apple. So very sharp move higher for Apple on the morning. Note 190, the key gamma strike. Oops. It's almost impossible to see, but there's a flow alert. Looks like right at the open. And traders were buying calls. That's shown by the rising orange line. When traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. So in the morning, traders were buying puts and buying calls, and the call buyers were more aggressive and net overall, and certainly driving price. Again, when traders buy calls, market makers sell the calls, they have to buy stock to hedge their delta exposure. And again, call buyers more aggressive, net. The hero line is rising. And note, this is a very typical pattern. Options traders take their foot off the gas and price consolidates and or moves lower. So in this case, this would be a very good opportunity to either buy a put spread or sell a call spread. I wouldn't necessarily buy a put, especially for a stock like Apple that doesn't move that much, but definitely a good opportunity. A good opportunity to either sell a call spread or buy a put spread. And all you're doing there is saying, I think price is going to remain below this certain level. All right, let's go take a look at Bookmap. So this sharp move higher in Apple almost looks like Nvidia or Tesla. I don't know if I've ever seen a move like that in Apple, up 3 points in the first half hour. Anyway, there's Apple. Good long setup today. Options traders taking their foot off the gas and price consolidating. All right, Troutfly asks, how do you like to personally use the delta column on your Bookmap chart? I'm not quite sure what you mean, the delta column. I have the session volume profile that's on the far right, and this is the chart volume profile showing the volume profile for whatever information I have on the chart. Then I have my cloud notes and then the current order book. And I do use all those columns. All right, so there's Apple. All right, Justin says he means the cumulative volume delta. If so, I do use that only for futures. I typically don't look at that for stocks. It can be misleading, I think, for stocks, but it is a very good indicator, a directional indicator for futures. All right, so that's Apple. Very bullish day in Apple. Dip buyers coming in, call buyers. All right, the next stock is NVIDIA. Let's go take a look and see what options traders are doing in NVIDIA. Oops. Separate out puts and calls. So in the morning, traders were buying calls, shown by the rising orange line, and they were selling puts, shown by the rising blue line. Note as the blue line levels off, also the call line levels off, price consolidates, call buyers come in, move price a little bit higher, they take their foot off the gas, and now price is consolidating. Get back to the total signal. All right, so very strong day in NVIDIA. Let's go take a look at Bookmap. So remember, NVIDIA reported earnings last week, I believe. Was trading up around 500 and reversed lower at the 500 call wall at the time. After the earnings report, has traded down close to 450, and maybe that that may be the hopefully the support level for NVIDIA. I added to my long position this morning. All right, Troutfly says yes, that's it. So we'll take a look at cumulative volume delta when I get back to futures. All right, so NVIDIA, very strong day today. Dip buyers coming in, buying calls, and also selling puts. Let's go back to Hero. Take a look at the net for the day. So both the notional value for the orange line, the call line, and the blue line are both positive, indicating traders are buying calls and selling puts. So coming in and buying NVIDIA. Let's go back to Bookmap. And NVIDIA was also moving pretty quickly this morning. Let's just zoom in on this. Zooming in a little bit, we see there were plenty of pullbacks for long entries. Right around 940 to VWAP. Back to the 457 level. Some consolidation around 460. And then price moved on up to the target at 465, the liquidity targets. Typically, higher liquidity. These are limit sell orders in the order book. That's what the heat map shows, a history of the limit sell orders in the order book. And for high price stock like NVIDIA, typically most of the liquidity is at the zeros and the 5 levels. So the 460 and the 465 level, these levels of high liquidity acting as magnet for price. Especially for stock that moves as much as NVIDIA. All right, so dip buyers coming in again today for NVIDIA, now making its way back up to 465. And NVIDIA, big driver of the Magnificent Seven, which are big drivers of the S&P 500 and NASDAQ. All right, the next stock I want to take a look at is Tesla. Let's go back to Hero. And note, I'm not sure I mentioned it, but this flow alert. A very timely flow alert to get your attention, indicating significant options activity. Again, very timely. If you got it in around that area, that was a great long. Let's take a look at Tesla now. So a strong day in Tesla as well. Notice that really for the first hour there was not much movement in the hero signal, and then just right around 10 a.m. I guess with the data that came out, the PMI data and the jobs JOLTS report, traders started aggressively taking positive delta positions. Note the timely flow alert, and then price really started to take off as traders continue to take positive delta positions. Let's see what they were doing. So this sharp jump higher in Hero, and the flow alert signal was due to call buyers. Traders started aggressively buying calls. Again, when traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. And as the call buyers take their foot off the gas, price starts moving lower. Let's take a look at that one more time. So net for the day, traders are buying calls, much more aggressive. They also net for the day selling puts, the notional value for puts and calls, both positive. All right, does anyone have any stocks they want me to take a look at? And meanwhile, I'll go back to the S&P 500 and take a look at cumulative volume delta. See if I can answer Troutfly's question. Looks like Tesla giving a lot back today. Let's go to ES. So ES, here's the cumulative volume delta that is shown by the magenta line there in the subchart. Interesting that today the yellow line showing stop orders, showing mostly sell stop orders. So after about 11 a.m. these lines start shifting lower, which really corresponds to price. And then the blue line is showing iceberg orders. All these numbers are negative, indicating large traders are selling with iceberg orders. Typically smaller traders are getting stopped out. These are sell stop orders. And then aggressive traders are selling. That's shown by the cumulative volume delta. All here in the legend, negative, and also the falling cumulative volume delta line. So in this case, it would be pretty difficult for me to take a long, and especially in this positive gamma mean reverting type of price action. So at least I think for the S&P 500, probably the more clear signal was definitely the long in the morning. The easier money, let's say, was made in the morning with the clear hero signals for both the S&P 500 and the Magnificent Seven. All right, so cumulative volume delta trout fly, it's just one piece of a puzzle, one more confluence, something to take a look at. And again, I only look at cumulative volume delta for futures. It can sometimes be misleading for stocks. And here for the NASDAQ, CVD makes a little bit more sense. Shown clearly rising in the morning and then really levels off as price drops and then consolidates. Note also for this CVD line, my settings, I have the, when CVD is negative, it's shown by the magenta line. When it shifts to positive, it's shown by the dark blue line. All right, Diego wants to take a look at gold. All right, I don't have GLD in Bookmap, but we can take a look in Hero here. So net for the day, traders are taking negative delta positions in GLD, shown by the negative notional value there. Let's take a closer look and see what they're doing. So net for the day, they are selling calls and buying puts. All right, I've got a few minutes left. All right, Joel asked about Bitcoin. Sorry, I cannot take a look at Bitcoin here. I don't have it in Bookmap, and there's no Bitcoin. Maybe there's that. Maybe that that ETF. Let's check the B. All right, so there's the Bitcoin strategy ETF. So I can take a look at that. Moving higher, traders taking positive delta positions. There's some other stocks that are kind of Bitcoin proxies like Coinbase. Still taking positive delta positions for the day in Coinbase. And you're welcome, Diego. All right, GBTC. All right, so Floyd's Garage, sorry, that is not included in Hero. So Hero does not support, it's not included in the list of stocks supported by Hero. Let's take a look at Adobe. Slow Tarazi indicated earlier hackers breached U.S. government agencies using an Adobe Cold Fusion exploit. So let's take a look at Adobe. And not much impact on the on Adobe stock, trading up to the 600 key gamma strike. All right, let's go back to the one final check on the S&P 500 and the NASDAQ. So far, a very quiet afternoon in the S&P 500 after that rush higher in the morning, more consolidation. Take a look at NASDAQ. and divergence there in the NASDAQ signal. But so far NASDAQ continues to consolidate. Finally, let's check Magnificent 7. So this is why consolidation and those symbols. Let's check a heat map here. So just kind of the opposite of yesterday. Yesterday, the green stocks were red, and a lot of the red stocks were green. So just the opposite of yesterday. This is the heat map for the S&P 500. All right, my time is up. I want to thank everyone for watching. Thank you very much for your stock requests, your questions and comments. And remember, ADP report is out tomorrow, 8:15 a.m. Eastern Time, and we'll talk about it tomorrow afternoon. So thanks everyone. Thanks again. I will see you tomorrow. Bye.